Hello everyone and welcome to my weekly outlook with me, Richard Perry, market analyst at Hantec Markets. Each week I take you through the key events I believe will be driving your investments in the coming days. Now, this week we've got the Fed, and it's going to be a big meeting. We're not going to get a rate hike this week. However, you're going to see the likelihood of some key moves from the outcome of the meeting. We've got the dot plots, which are important. We've got the potential start of balance sheet reduction by the Fed, and also the changes to the inflation projections. All of these factors could be potentially crucial to markets coming further down the line. Certainly the dot plots could change the course of expectations on rate hikes throughout 2018 into 2019. Will the Fed bring the dot plots back in line to where the market's more thinking maybe one rate hike, possibly maybe two next year? But certainly the moves will be interesting off the back of that. But also we're looking at the impact of balance sheet reduction. The start of balance sheet reduction, will that matter for markets? The expectation at the moment is it could be quite insignificant, but however, you look at the fact that the opposite of that, which was quantitative easing, what did that do to the dollar? What did that do to equity markets? We saw the dollar weakening, we saw equity markets strengthening. There's no reason why that wouldn't happen in the opposite way. So potentially there could be a beginning of a key move on the dollar potentially coming further down the line. We just don't know at the moment. As I said, the markets are not really anticipating a significant move, but this thing has never been done before, so how are the markets going to react? So in terms of markets moves as well, we've seen huge moves on sterling as the Bank of England rhetoric has changed significantly more hawkishly in the last week, and that sort of has increased expectations of perhaps even a rate hike in November, probably one to just undo the rate cut that we saw in the wake of Brexit, maybe just a 25 basis points. One and done perhaps going forward, but certainly the market will have to sort of move to reprice for that if that were to be seen. And sterling has rallied sharply in the last few days. Will it continue to go higher? Will it start to sort of consolidate around here? Potentially support coming in and some key moves potentially coming further down the line. So lots to react to on sterling. But throughout this week we're looking at the Forex markets, which have shown some significant moves. Again, breakout on dollar yen seems to be coming out. We're seeing euro dollar starting to consolidate. Is that a consolidation that is a buying opportunity, or is that a consolidation which is just starting to sort of roll over on that euro dollar trend recovery that we've seen? I think again the Fed will be key on Wednesday. In terms of your sterling charts, we're looking at obviously a huge upside break that we saw on Thursday and Friday, up to levels not seen since the day of Brexit. Will the market continue to push higher? You've got the support at 34.80, which is a breakout support. I think anything that finds a new low or a new base above that sort of level will be considered to be a positive, just a sort of a little bit of a cream off the top effectively of that move. But it'll be interesting how the markets react as the markets sort of move in terms of profit taking this week. In terms of dollar yen, 111 is big key level. That's a breakout level on the August ceiling for dollar yen, and will it continue to pull higher? If it does, it will go further into the sort of upper half of that trend sideways consolidation that has been in place throughout 2017. You're starting to think about 114s, perhaps even 115 again, but 111 big figure is the first key level to watch out for a closing break. Now, in terms of your equity markets, we're looking at how the S&P 500 reacts to this Fed meeting this week. As I said, equities gained strongly on the back of quantitative easing. How will they react to quantitative tightening as and when it starts to come around? Will it start to see a Wall Street correction? We're seeing Wall Street markets holding up at all-time highs, 2,500 on the S&P 500. Will that remain the case at the end of this week? We've seen some big divergence of performance actually. The Eurozone markets are also fairly positive. DAX and CAC holding up strongly. DAX again breaking higher today, but the FTSE 100 has been a significant underperformer on the back of this strength of the sterling. It's a big negative correlation play with sterling, and it's been under pressure following on from a breakdown below 7,300. That is a key level of resistance now that we need to look out for this week. Now, in terms of your commodity markets, again with this strengthening dollar that we've seen in the last few days, as the safe haven plays have had to unwind their move, we've seen the treasury yields pulling high, we've seen the yen under pressure, but we've also seen gold coming back as well. Gold being coming under sort of profit-taking influence there. 1300 to 1310 on gold is a key level to watch out for this week. A break under 1300 would be an outlook changing confirmation there. In terms of your oil price, there has been some interesting shifts in the oil price dynamics recently. The tightening of the supply-demand gap there is ongoing, and also we're seeing the market coming back online in terms of refineries in the States following on from Hurricane Harvey, and that will help to underpin the price. Both Brent crude and WTI looking to break out, looking to push higher, remaining supported there. So will that continue this week? Now, on your economic announcements, as I said, main focus obviously comes with the Fed, but we've also got the Bank of Japan on Thursday. What will the Bank of Japan do? It only reports or announces a few hours after the Fed. It's unlikely to do anything that rocks the market. I think the expectations on the Bank of Japan are fairly muted. In terms of your yield differentials, the 10-year JGB yield has barely budged. All the while we've seen treasury yields strongly higher, gilt yields strongly higher, so that has been a big driver behind, say for example, the move on dollar yen higher. So we'll likely to see a limited move, I think, on the Bank of Japan on Thursday. But we're also looking at a little bit of housing data. We've got existing home sales for the States, retail sales for the UK. That has an impact on sterling, but the main focus will be on the Fed all week. So with that in mind, I wish you good luck in your trading, and I will speak to you next time. Thank you.